In India, most of the people they invest in real estate. Real estate has created wealth for many people in India. Today in this video we are going to discuss which is the better option, whether it is better investment option, whether it is real estate or stock market. This is Ram Charan. Welcome to my channel Ram Money. If you have not subscribed to my channel, click on subscribe button. So in this video, I'm going to present a few properties examples how they have given returns in last 40 to 40 years. So first property which I'm going to show is Samudra Mahal. You would have read this article which is the talk of the town in 2013. So this property name is Samudra Mahal. So this property was launched in 1970 and it was the per square foot rate was 700 rupees. So when this property was sold in 2013, it was sold at 1,18,000. So 700 rupees invested per square feet has become 1,18,000 per square feet. So the average CAGR return of this property is 12%. I'm going to show you another property. I'm not disclosing the name of the property. So this is a property, the per square foot rate was 100 and 2013 the per square foot rate was 19,000. In 1979 it was 100. Now in 2013 it is 19,000. So the CAGR return of this property is 16%. You may be wondering, in the previous case it was 1,18,000, still CAGR return is 12%, and here it is 19,000, but still CAGR return is 16%. So most of the people, when they calculate the returns from the property, they make this mistake. So here the second property, although selling rate date year is same, but the property when it was bought was is different. The first property was launched in 1970. I invested in 1970. The second property it was in 1979. So that is why CAGR return is more. So 16%. So friends, please make sure that whenever you are calculating the returns from any investment, any property, please do logical and mathematical calculation, and there are CAGR calculators online, so you have to do CAGR calculation, not the absolute value. So that is a wrong way of calculating the returns. So I want to tell you that I will disclose the second property name. So before telling about the second property name, I'm going to show in picture the property. I will show the property picture. So any guesses? What is the name of this complex or layout? You are correct. This is Sensex. So second property what I was talking, it was Sensex. So Sensex was 100 in 1979. When Samudra Mahal property was sold, it was 19,000. So in CAGR return, the Sensex has given more than the property return. Like Samudra Mahal was 12% and Sensex is 16%. So if you calculate today also, 1979 Sensex was launched. Today Sensex is around 47,000. So the rate of return is 16%. Still, many people say my great grandfather bought this property. It is one. It was when it was bought, it was 1 lakh. Now it will cost around crore. And most of the people they are attracted towards these kind of returns, but actually in India property has given 12 to 13% rate of return, so which is very less compared to stock market or Sensex returns. I will tell you why more people are why people believe real estate is a greater good investment compared to stock market. One is whenever they make investment in stock market, they do bigger investment, bigger, and I will give an example. They invest 50 lakhs. 50 lakhs will become 1 crore, so the profit in real estate they make is 50 lakh. The same person will invest 50,000 in stock, in a mutual fund or in a stock. So if it becomes 1 lakh, so profit what he makes is only 50,000. So 50 lakhs will look more attractive than 50,000. And another is longer duration. Property people invest for longer duration. So nobody sells. If they buy a property, tomorrow they won't sell. They keep it minimum for 5 to 7 years. And sometimes the properties are gifted by great grandfather or a father, and it will be the duration of investment will be more than 15 to 20 years. But unfortunately, people will not invest in mutual fund or a Sensex or stock in for more than 5 years. Also, they won't invest. The average holding period in India is around 2 years. So definitely, property will give good returns compared to stock market. And a third factor is there is no daily price movement or daily change in NAV. So in real estate, so most of the people when they see the daily fluctuation of prices, definitely they come out of the stock market. They will sell their mutual funds units. So this is not there in real estate. That is why people believe real estate gives a better investment option compared to stock market. So on an average, stock market has given more returns than real estate. However, some properties definitely have given more than the Sensex returns. So similarly, in some stocks, individual stocks like Infosys or any Reliance or Bajaj, they have given more returns compared to Sensex. So I'm going to tell some of the advantages of investing in stock market compared to real estate. One is partial liquidity. Whenever you buy a property worth 50 lakh, now the current value of the property is 1 crore, you can't do the partial liquidation. That means you can't, when you buy a flat, you can't sell a kitchen or a single room. Whenever you want to sell, you have to sell the unit. Even whenever you buy a site also, 30-40 site if you are buying, you can't sell 100 square feet. However, in stocks or in mutual funds, if portfolio is worth around 1 crore, you can, if you need for emergency some 10 lakhs, you can easily liquidate. And you can liquidate partially, you can sell 10 lakh worth and you can still keep another 90 lakhs. Third is easy to sell. In mutual fund, whenever you give a redemption request, within 2-3 days the money will be credited to your bank account. However, in real estate, the liquidity issue is there. You have to wait minimum 6 months to 1 year to sell your property. The third factor is maintenance. Maintenance you have to pay property tax, you have to pay property maintenance fees, all these expenses are there. You may say in mutual fund also you have expense ratio, but whatever returns I have given is I have deducted the expense ratio and I have showed the returns. And when the correction period, correction comes in both stock market and real estate. Both are subjected to negative returns, but in stock market recovery is very fast. Whenever a property price falls, the recovery time is more. Friends, I believe real estate and stock market both have created wealth in India. But what I feel is you have to do 50% allocation to real estate and 50% allocation to stock market. This is how you have to do the investment. Both investment options are good. Thank you for watching my video. If you like the video, please don't forget to share the video. Thank you.